Good morning, traders. It's Wednesday, February 12th. Not a whole lot has really changed on the markets, so there's going to be a short little update here, but more or less, equities are trading back up near yesterday's highs, so we're threatening to hit all-time highs again today. If we take a look over at our trend analysis chart for the SP 500, you can see this price action pretty clear that the market has. We were in a downtrend. We had a nice impulse move to the upside. Let me just move this chart over a bit further here. Whoops. Hold on. Here we go. Here we went from an orange market, so a neutral market, to a downtrend. Downtrend flipped around. During this time, we saw bonds rally, and we caught this sideways and higher move in the market. We caught it with bonds with a 3.5% gain, and now we're back into this uptrend in the market. And if you look at the recent price action, the market put in a bottom, had a little bull flag, rallied up, consolidated a bit. It really had a strong momentum move here, doing a series of little pops and pauses, but now we've got a more significant pullback. And more or less, this first measured move here, I kind of consider this kind of one move here, which brings us up to our second move. And now if we look at this, I would say this move to here is the another bull flag, and I think we could continue to see this head higher. And that's right now we're trading up here. We're on the verge of breaking through to push to all-time highs again. You can see this red hashtag right here. This is our overbought market condition, and this is what the market likes to do during a bull market. It'll continuously tag this red level. So we popped up above this level yesterday, and then the market faded back. And believe it or not, the red level was over here, and it continued to be at all these levels as the market pushed through. And this is a strong momentum move, constantly pushing through overbought territory until that downward bias shifts direction, and then suddenly the market pulls back. And the red hashtag was up here as well, and the market pulled back. And now we're at this point here where we're going to get overbought. It pulls back a bit, it'll push up, it'll get overbought, and it'll constantly do this slow grind going forward. And if we were to just look back at previous times, let's go back over here. Now you can't see where the red hashtag was, but more or less the red hashtag was constantly hit at these levels. The market just kept pushing. It pushes these upper limits, and instead of the market doing this really strong rally and just kind of taking off big up days, it'll pop and consolidate, and it's just constantly overbought, and we're waiting constantly for some big correction to happen. And that's the big fear that everyone has. The market just keeps going higher and higher and higher. It's inching its way up, gets overbought, pauses, gets overbought, pauses. And this is a 30-minute chart. So this is actually a very bullish sign. When the market is constantly pushing this overbought territory, it means there's lots of power behind it. People are piling in. They don't mind paying a premium. It's actually a very strong time in the market, and that's where I think we are headed here. I think we could very easily see this market. This morning it's already trading above this level. I think we could see it constantly consolidate and just do this slow grind higher. And it's just this wall of worry. People keep thinking it's got to correct and have some type of pullback, but it doesn't need to. And that's where fighting the trend can really get you. Anyways, let's go back and take a look at the other markets. Money's flowing into stocks this morning. That means they're coming out of somewhere. That money is coming out of bonds. Bonds are down 0.4%. If we look at gold, it's down just a little bit this morning. Silver's down 0.4%. So money is flowing out of the safe havens, and it's going back into equities. If we take a look at gold miners are set to open slightly lower, but actually pretty much flat on the session. The miners are building up some power here, and the big question is which way is it going to break? Overall, it's got a nice, you can argue here, this is a cup and handle formation. It's also a bull flag with a pennant formation, and technically this pattern where you run up and consolidate in a pennant typically should resolve to the upside. This is a head and shoulder, or sorry, a cup and handle type of formation. If it can break this significant high, or these highs right up here actually, if it breaks those, I think we could see a huge run in the miners. And a lot of what's going to happen in metals, I think, is going to hinge on what the US dollar does. The dollar's been trading significantly higher. Typically when the dollar rallies, gold falls and the miners fall. But we have seen the dollar rally, and gold stocks and gold have been trading sideways the whole time. So they're holding their ground. And as soon as this pressure, this downside pressure on the dollar that keeps pushing higher. As soon as that relieves itself and starts to pull back, we could see metals and miners really pop and take off. And again, bigger picture here, the dollar is in an uptrend. The big picture, it's been in an uptrend for a long time. It's still making a series of higher lows. We got a higher low, higher low, higher low, significant higher lows. Now these lows are almost the same, but it's still making the same or a higher low, but it feels as though it's starting to reverse. Usually you can see there's a nice distance between these previous significant pivot lows. Well, this time it's even. So you could argue here there might be some very bearish formation forming. This could start to roll over and break down. This is where we're going to see the precious metals market really take off. We need the dollar to start to collapse and sell off, and that may or may not happen. So, but we are in position for miners to rally. Maybe if the dollar just trades sideways, maybe it trades sideways in this range for a long time and holds its value, that would still be good for gold and miners, and we could see gold miners really take off. Let's go take a look over at energies. Natural gas up 1.7%. It's still stuck under this 5-day moving average, got oversold, popping back up to be at the resistance area, not only the 5-day, but also these previous pivot lows. So it's threatening these significant lows at this point, or testing them again. Overall, we got to wait for natural gas to lose this downward bias. It's just refusing to roll over. I feel it's close, but I mean, I felt it was close for a long time, and it just hasn't reversed at this point. Crude oil up 2% this morning. We talked about how it could be forming one of these type of little bottoming formation here, or this pause, this consolidation, just like over here. This is a really significant area. We're going to have this range here, whichever way it breaks out of this range, whether it's to the downside or the upside, is going to be a fairly significant move. I think we'll see it hit 55, 56 if it breaks to the upside. If it breaks down, I'm looking for 44 to the downside. So at this point, it's threatening this breakdown zone. It's now starting to consolidate in this range. Whatever way it breaks, I think we'll have a fairly significant move in either direction. And if we get an opportunity, we're going to either get long or we're going to buy an inverse oil ETF to take advantage of that next kind of surge in price. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.